Hi folks, Trisha Curtis, CEO of Petrons and host of the Petrons Podcast. Today is Friday, September 1st, 2023. Happy Friday, happy Labor Day weekend. I just had Chris Atherton on the podcast with this. He's the CEO of EnergyNet. Fantastic discussion on oil prices, activity, the state of the industry, what he sees from his perspective on asset sales, on excess capital from EnergyNet. Really, really good podcast. But with that being said, oil prices are almost $86 a barrel right now for WTI. We're not seeing the same rise in price in tandem with Brent, which tells you a lot about it's Friday before Labor Day. Thin trading volumes. We've had thin trading all of the month of August. But I think it's really critically important to think about how high oil prices are at and the state of the economy. If oil prices were at this level last year, it's a completely different story because we have far less stimulus, far less consumer resiliency in the system. Mortgage rates have come down from 739 to 707. You're seeing houses. I walk around Denver. You see a lot of houses on the market. Nothing is selling. We're seeing this across the board. You're starting to see construction jobs come down. We saw 187,000 jobs added last month. That was the data that we just saw today. The unemployment rate ticked up 3.8%. So no longer can the Biden administration be bragging that unemployment is at 3.5%. It has ticked up. That is something positive for the Fed to see that the job market is cooling a little bit, but that's a big problem when you have that, the unemployment rate ticking up, softness in the labor side coming, still have wages going up, and you have oil prices now $86 a barrel. That is a problem. You take that in tandem with the other piece is that this month, September, student loans have to start being repaid. That is a really big deal given that the average payment on average is about $400 a month. And that means that's going to start really ticking into this consumer that's already defaulting on auto loans, that already has massive auto loan payments, that's credit card debt is over $1 trillion, and folks are not paying off their credit card debt every month. And so you're having this rack up in these higher interest rates. So we're really starting to see the pressure on the consumer. I think that's critically important. But when we're seeing unemployment, a little softness there, pressure on the consumer, higher oil prices, and still seeing higher labor prices, that puts the Fed in a massive bind. So thank you so much for listening, folks. Talk to you soon. Listen to the latest podcast, episode 92, on everything U.S., on everything China. Deep dive on all of it. And Dan Romito is going to drop next with Pickering Advisors. So talk soon, folks. Bye.